On June 12th, SpaceX goes public. The biggest IPO in Wall Street history. Bigger than Saudi Aramco. Bigger than Alibaba. More than triple the size of any previous listing. The company is targeting $135 per share at a $1.75 trillion valuation, selling 555.6 million shares for a total offering of $75 billion. And Morningstar just said it is worth less than half of that. Today, we break down the moat, the potential, the risks, and whether this is the opportunity of a decade or the most expensive mistake you could make in 2026. Chapter 1. What is SpaceX? Most people think SpaceX is a rocket company. That is like saying Apple is a phone company. SpaceX is 3 businesses in one. Rockets, launch services. Reusable orbital rockets changed everything. The cost per kilogram to orbit has fallen from $54,000 in the space shuttle era to under $2,700 today. A 95% cost reduction. Every other launch provider on Earth is now uncompetitive. And Starship, if it works at full scale, reduces that cost by another order of magnitude. Starlink. By late 2025, Starlink has reached an estimated 7 to 8 million users with daily net additions, supported by extended regional availability and new direct-to-cell features. The fastest growing internet provider in history. Revenue is expected to grow from around $15 billion in 2025 toward $22 to $24 billion in 2026, with Starlink being the main source of growth. XAI and space-based AI infrastructure. In early 2026, SpaceX completed a $250 billion deal to acquire XAI, Musk's AI lab, giving SpaceX a combined valuation near $1.5 trillion. SpaceX is now positioning itself as a space-based AI infrastructure company. Data centers in orbit, satellite-powered compute, the next generation of internet backbone. I emphasize this is not a rocket company. This is a bet on who controls the infrastructure of the next century. Chapter 2. The moat. SpaceX's moat has 3 layers. Cost moat. Reusability destroyed the economics of every competitor. Boeing, Arianespace, Roscosmos, none can compete. Blue Origin is years behind on orbital reusability. The cost advantage compounds with every launch. Data moat. SpaceX has launched more rockets than any organization in history, including governments. Every launch refines the models. Every satellite deployment improves the constellation. It is the same compounding data advantage Tesla has in autonomous driving. Political and regulatory moat. Musk's relationship with the current US administration creates advantages no competitor can replicate through engineering alone. Government contracts, defense relationships, NASA partnerships, deeply embedded in American space policy in ways that take decades to build. Chapter 3. The bull case. The bull case is about who controls access to space. Starlink's direct-to-cell technology, connecting directly to standard mobile phones without ground infrastructure, is a potential $1 trillion addressable market. Every unconnected person on Earth is a potential customer. There are 3.5 billion of them. Starship opens entirely new economics if it reaches operational scale. Space tourism, orbital manufacturing, point-to-point Earth travel, lunar bases, Mars. Each of these is a new industry that does not yet exist, and SpaceX would enter with an insurmountable head start. The investors who bought Amazon at a PE of 500 in 2001 understood the business being priced was not the bookstore. SpaceX is not being priced as a rocket company. It is being priced as the operating system for the space economy. Chapter 4. The bear case. Morningstar values SpaceX at $780 billion, roughly 48% below its IPO target. SpaceX recorded a net loss in the latest quarter of $4.28 billion after losing $4.94 billion in 2025. The most anticipated IPO in history is losing nearly $5 billion per year. The capital-intensive nature of the space industry, coupled with the costs of the AI data center build-out, is likely to keep SpaceX in the red for years to come. A $1.75 trillion valuation would put SpaceX on 67 times sales, 3 times as much as Nvidia's rating based on its past financial year, 3 times more expensive than Nvidia on a revenue basis, for a company losing $5 billion annually. The Elon Musk factor cannot be ignored. His attention is divided between SpaceX, Tesla, XAI, X, and his government role. The XAI integration adds execution risk unrelated to rockets, and his political involvement creates the same brand risk that has damaged Tesla's sales in Europe and Asia. The entire long-term bull case depends on Starship achieving operational reusability at scale. The technology is extraordinary, but aerospace is unforgiving. Delays are measured in years, and every year of delay is another year that $5 billion in losses compounds. Chapter 5. The Valuation Problem. The valuation would need to fall by an additional $1.25 trillion to escape historical bubble territory. SpaceX is genuinely one of the most extraordinary companies ever built. The technology is real, the moat is real, the potential is real. But $1.75 trillion for a company losing $5 billion per year, priced at 3 times NVIDIA's revenue multiple, is an enormous amount of faith to price in on day one. Morningstar expects SpaceX stock to hold up immediately after the offering, citing a small 3% initial float, strong investor appetite for AI infrastructure, and inclusion in the Nasdaq 100 just 15 trading days after the IPO. The stock will probably go up on day one. The small float and index inclusion create short-term demand that overwhelms valuation concerns. But short-term price action and long-term value are very different things. Chapter 6. What to do. 3 things to understand before buying SpaceX at IPO. 1. IPO pricing is not investor-friendly pricing. Morningstar says long-term investors will have more opportunities later with a greater margin of safety than at flotation. The IPO price maximizes what SpaceX and early investors receive. The smart money has already been made. 2. The Musk premium cuts both ways. You are not just buying a company. You are buying a person. That premium can expand with success, or compress with distraction, political risk, or execution failure. 3. Wait for the lock-up expiration. Early investors are locked up for 6 months. When that expires around December 2026, significant supply hits the market. Historically, this creates better entry points for patient long-term investors. The SpaceX opportunity is real, but paying the maximum price on the first day of the most hyped IPO in history is not investing. That is speculation. SpaceX is building the infrastructure for humanity's next chapter. The technology works, the moat is deep, the potential is almost unlimited. But $1.75 trillion for a company losing $5 billion per year, priced at 3 times NVIDIA's revenue multiple, is not a bargain. It is a bet on a future that may be real, but is still decades from generating returns that justify today's price. The business is extraordinary. The valuation is not. If you want to understand how to value any company, check out my complete investing masterclass, link in the description.